Well, more people logged on. And then star one.
Star one.
Good morning, everyone. I apologize. I thought that you could hear us before, but it turns out the phone was not connected. So we're going to go ahead and try that again. So thank you for joining us today. This is Megan Thompson from ABH, and I'm just going to walk you through some housekeeping before we get started, before I turn it over to Brooke from DMH to start with the formal presentation. So in terms of housekeeping, there's two options for audio for the webinar. There's the phone option and computer option. And just ABH in the past has experienced that folks have had trouble with the computer option for audio. So we strongly recommend that you use the phone call option to call in. I also want to bring your attention to the questions pane in the control panel. So at any time throughout the presentation, you can just type in any questions that you might have, and then the plan will be to spend some time at the end of the presentation to address those questions and answer as many as we're able to. There's also a handouts pane, and on that you'll see all of the different attachments which were sent out in the invitation email, and then also that will be addressed throughout the presentation. So you can download those at any time that we're still doing the presentation, and then once we log off, they won't be available any longer, but we will plan to just send those out as well following the presentation. And in the handouts that we did send out ahead of time, we realized today that we accidentally sent two attachments of the regulations as opposed to an additional letter for clients. So you will want to make sure to look at the email that we send out following the presentation to make sure you have all 5 of the correct attachments. If you do have any technical difficulties with hearing or seeing the screen at any time, you can call the GoToWebinar helpline, which is 877-582-7011 for support. And we also will be recording are recording today's webinar, and we will make that recording available as soon as we can after the presentation. So now I'm going to hand it over to Brooke from DMH, who's going to kick us off.
Good morning, everyone. I'm Brooke Doyle, Deputy Commissioner with the Department of Mental Health. Happy to be here with you this morning to discuss the charges for residential services and support. Before I get started, I'd just like to extend a big thank you to ABH for helping to host this webinar today, and for Dan Reese for agreeing to help with some of this training as well. So thank you to both of you. Charges for residential services and supports are governed by DMH regulation. The regulation, as Megan referenced, has been forwarded to you. It's 104 CMR 30. The section that speaks to the charges for residential services and support is 104 CMR 30.06. It's important to note that these regulations speak to a procedure that actually has been in practice for some time. However, we have changed the practice that are governed by these regulations, and the new procedures are specified throughout these regulations, and that's what we're going to focus on today. These regulations have been under review for some time, and because we implemented after a period of time that was considered more extended than when the regulations were originally proposed, they are out again for comment. That comment period will end January 18th. The regulations will be considered final as soon after that time as is possible. We are asking that providers begin implementation in January of 2019 in anticipation of that finalization, which would mean that the first charge would be collected in February of 2019. I'll get into more detail about what that means. The charges for residential services and supports are commonly referred to as client contributions. We previously had regulations that were called room and board. The room and board regulations are different than these regulations in the sense that the procedures are different. The fee is now based on a statewide average of costs that are not attributable to costs associated with Medicaid for rehab options. The statewide average gets approved by the Office of Medicaid, and it is one of the attachments that we sent. There's a memo that confirms what that statewide average is. For clients who are receiving what is called a recurrent payment, which is a payment of income that they receive on a recurring basis, the charge is based on the equivalent of 75% of that recurrent fee. That also is referenced in Regulation 104 CMR 30.6 Section 5. Earned income, if any, is charged at 50%. The reason for that is that we actually wanted to make sure that clients were not discouraged from taking important steps in their recovery, like getting employed and holding more of their earned income if they're living in environments that are governed by these regulations. DMH also felt strongly that clients needed to be able to hold a certain amount of their recurrent payments as their own personal money. These regulations speak to a standard amount of money that a client should always have as a minimum, and that's $200. Next slide, please. The charge is subject to allowable adjustments. We will walk through those kinds of adjustments in some of the worksheet scenarios. These adjustments are also referenced in Regulation 104 CMR 30.06 Section 6. DMH worked with providers and ABH to create a set of standard documents to support the effort to implement these regulations. The documents, which Megan referenced, have been distributed initially by me through email, then by ABH as part of this webinar. The standard tools include all of the materials that would be needed to implement these regulations in full accordance with what they call for. As I noted in the earlier slide, there's a 1-month difference between when we issue notice to clients and when the first fee is collected. The notice is a requirement of the regulation, and there is a standard notice that has been developed to support that. The calculation worksheet that is also a standard tool has formulas built into it that actually allow the person developing the charge with the individual client to be able to just enter the values into the spreadsheet and then come up with the charge in the end. Dan will actually be walking through some samples of that in more detail. But in that spreadsheet that holds the calculation worksheet, there's an instruction sheet, and there's also a charges agreement. Those 3 are tabs on that Excel spreadsheet. There's a letter that was developed explaining the charge. As I mentioned, the fee payer notice is the notice that goes to clients. And then to support this initiative, because it may be understood as a change by clients, as I mentioned, client contribution is something that has been in practice for some time. However, this change in how we are doing it may not be well understood by clients, so a shared letter was created between DMH and providers that helps to explain that. There's a memo that also has the statewide average that was calculated using the formula that I was referencing earlier, the charges that are determined to not be attributable to Medicaid costs. That forms a statewide average, and you have a memo that affirms what that is. Next slide, please. Next up in the training, we wanted to be able to walk you through a couple of scenarios of how to apply the calculation worksheet. I'm going to ask Dan to pick up from here.
Hi, good morning, everyone. My name is Dan Reese. I'm from North Suffolk Mental Health, and I'm going to walk you through a couple of scenarios with the worksheet.
All right, everyone, just give me one moment as I'm going to turn the share Dan's screen with you. And we have to.
Oh, right in the middle. Okay. Hey, great. Okay. So as Brooke had mentioned, one of the items that we've sent out is it's a simple Excel worksheet that we've put in formulas in, so that really all you have to do is input the monthly amounts, whether that be the earned income or the benefits and the deductions. As she mentioned earlier, there are 3 tabs on the bottom, and I hope you can see those. One of them is the instructions, and really all that's in here is just some simple instructions on how to fill out the form. The worksheet, and then the last tab here is the agreement. And the way that we've set up this worksheet is most of the input, all of the input actually, will be happening on the worksheet, and then that information will get transferred directly to the agreement. So let's go back to the worksheet. Up on the top here, sorry, can I get rid of this thing here? Yep. Oh, just drag it over. Okay. I can probably stay with this. So the top here, we just simple individual's name, the date that the charge is going to be effective. We've allowed some space here for you to put some identifiers, program name, address, etc. We've left this what we call just essentially a general identifier spot here for any provider to use, whether that be a district or region, and also an identifier for the client or perhaps a cost center. We've protected the worksheet so that really only the shaded cells you're able to input information and change. As you can see, if you try to tap or select anywhere else, it's not going to let you do that. So let's run a couple of scenarios and put some information in here. So let's start off with an individual getting $600 in Social Security. And having, let's say, $200 in health insurance. So what the formula will do is calculate that the individual needs to keep $200 of their own money, and that based on the calculation, it's going to be $250, but because they need to keep $200 of their own money, then their charge is going to be $200. If, let's say, we had an individual who had $800 in Social Security, and let's say earned $500 in earned income. And let's change that to 150. So now the worksheet will calculate that the individual's charge is going to be $700, and it'll automatically pick that based on the three options that it has, whether that individual should keep $200 or whether the calculation will be predominant or whether the maximum charge will be predominant. If this particular individual, let's say, had $1,000 and earned $1,500, and we'll keep $150 in health insurance. So now you can see that the calculation has it at $1,350, but the maximum charge allowed is at $1,056, so it's going to choose $1,056. If the particular program that the individual works in, lives in, also has subsidized rent, we've allowed a spot here to for that input. Let's say this particular individual pays $300 in subsidized rent. So all this information then is transferred over to the agreement, and you'll see all this information in here, where the person lives, the charge that's going to include the $300 of the subsidized rent, how to appeal, and also who needs to sign. Once you're done, I would recommend, it won't automatically do this for you, but you'll need to print the worksheet and the agreement so that you have both of those for the individual to sign.
All right, thank you, Dan. So I think at this point we're going to be taking questions. So it doesn't look like we've received any questions yet. So hopefully that's a good sign. But we will just give it a minute or two to just see if anyone wants to type in any questions. Again, on the GoToWebinar control panel, there's a questions tab. And if you just click that, you can type in your question and click send.
While people are considering any questions that they might have, a couple of other points about the regulations. As Dan referenced, there is an appeal that's allowable by regulation. The appeal is specific to how the charge was calculated, and it has language about how to file the appeal and who processes the appeal. This is written in those same regs that I highlighted earlier. I see that we have one question.
Yes, so the first question is, are the charges different for an SIE program where they pay utilities, etc.?
Any environment that's governed by these regulations would fall into this calculation, into this charge. That question is complicated because certain SIEs are actually apartment environments. It's difficult to answer that question as a single answer. What I would recommend is that if you're not sure whether the environment that you're referencing is governed by these regulations, I would recommend that you contact your local DMH office where the contract is hosted, and they can walk through with you to determine if that particular environment is governed by the regulations.
Okay, and the second question is, how do you factor in vacancies?
There would be no charge attributable to any vacant room. The vacancy would be filled, and then at the time that an individual is being enrolled, this calculation, the notice and the calculation would be done based on that individual's benefits or earned income or both.
Okay, and then the next question is, explain the charges based on liquid assets for someone who doesn't have recurring payment.
There is language in the regulations that speak to how to account for liquid assets. There are some that are considered allowable and others that are not. I would recommend that you please refer to the regulations and the definition of liquid asset. These can be found in 104 CMR 30.06. And again, like I said, this is definitions, which is section 2. And then if you go further down into how to do the calculation, you will see where the liquid assets come in.
Is there a comprehensive listing for all the expenses that are counted towards medical expenses?
There isn't a detailed list about which medical expenses are allowable. In short, it is a medical expense that's paid out of pocket by the individual. The individual has to be able to substantiate that those medical expenses were in fact paid out of pocket. So, for example, there could be a receipt or a recurring expense that they have, but these are not governed or paid through any other source. So, for example, they're not paid through health insurance.
And who pays the rent to the housing authority when there is a vacancy?
Vacancies are a different issue than what we're talking about in this particular training. And again, each environment would be a different scenario. So it is difficult to give a single answer to that question. What I would offer again is that vacancies are a different issue than how to calculate a charge.
Okay, that looks like that's all the questions we've received. We'll give it one more minute just in case you're still typing. Oh, looks like a couple more just popped up. Oh, so the first question is transportation considered a medical expense if they are picking up medication?
That's a good question. I can get some guidance about that and get back to you. We will post clarifying answers to questions that we aren't able to give an answer to today.
Are people who are in the GLE and using a Section 8 subsidy with rent determined by the housing authority?
The subsidy portion is. The charge is above the subsidy, and the calculation worksheet, as Dan referenced, has a space to enter what the subsidy value is.
Does the rep payee fee count as a deduction? Not sure.
All of the allowable adjustments are listed in the regulation. I will get you the section that speaks to the adjustment. That would be 104 CMR 30.06, Section 6.
It looks like the next question is, if we are already calculating surcharges for care with these formulas, are we required to redo everyone's calculations with this new form effective February 1st, or can we wait until they are due for their annual recertification?
The regulations, once they are finalized and in effect, will govern how we do the calculation and the charge for residential services and support. If you did not apply the charge on the basis of what's governed by these regulations, then it would need to be redone. if you did, in anticipation of these regulations becoming finalized, then that would be the correct calculation.
Will there be additional trainings on this?
As was noted earlier, this training will be posted. It's being recorded. If there are specific training requests, I would ask that those requests are forwarded. I'd be happy to receive them. My name again is Brooke Doyle. My email address is brooke.doyle@massmail, one word, .state.ma.us. Any requests for training should be forwarded to me, and I'd be happy to determine how we can best meet that need.
All right, any last questions? So the question that came in is, are we able to send out letters so we can't send out letters or notices until regulations are finalized in January?
Providers are able to start implementing now. These regulations have been posted for comment. We're not expecting any changes. The reason they're being posted for comment, as I mentioned earlier, is because of the lag time for implementation. We actually finalized these probably about 6 months ago. However, due to the change in contracts between CBFS to ACCS, we got authorization to postpone the implementation. So we are anticipating that these regulations will be finalized as written, since they were already out for public comment once. With that, we are requesting that providers go ahead and get started, and we understand that as the regulations move through the finalization process, and because they're posted for comment, we want people to understand that we will consider this a pilot period until they're officially finalized. The open comment period ends on January 18th, so we are not expecting any changes as a result of that. And in that, we would ask that people go ahead and get started, and you will be covered if you issue a notice during this pilot period. As the calculation worksheets are done, those will be considered valid. You would not need to do them again.
Okay, and while we're waiting to see if any final questions come in, just a reminder, as Brooke mentioned, this webinar is being recorded. So we will be posting this on the ABH website as soon as we're done here and can get it uploaded. And then we'll also be making a closed caption version of the webinar available. That will take a couple of business days to get that processed, but we will also be posting that as soon as we can on our website.
This is Lydia from ABH. Do you mind speaking to the phase-in period for people whose charge goes over $100 more than their current charge, if I'm remembering the regs correctly?
Yes, yes. As people familiarize yourself with the regulations, one of the areas that the department received some public comment about and made adjustments for in the regulation procedure is particularly during this period where people may be adjusting from one procedure for determining a charge to this other one. If there's an adjustment to the charge for the individual that exceeds $100, providers can work with the individual to allow that charge to be collected over a period of time that matches the amount, so that the individual isn't financially strained as a result of this adjustment. Please refer to the regulations for guidance about that. If there are other questions about how to implement that, as I mentioned, people can certainly reach out to me directly. And I would ask, Megan, when you send around the materials again, if you could please include my email for any questions or training requests, that would be helpful.
Okay, definitely. All right, so it looks like we got through all of the questions. So we're going to go ahead and, oh, one more just popped in. Just one moment, please. Okay, so someone said that the calculation sheet that was being shown appears to be different than the one included in the email or that is listed in the handout. So we will take a look at that and make sure.
I can answer that.
Oh, okay.
You're correct that the original had a value written into that space with the maximum amount. That was literally just a placeholder amount. At the time that Dan developed the worksheet, he didn't know what that amount was going to be and wanted to highlight that area. I sent it around in password protection and didn't want to unprotect it. We now know what the monthly amount is. It's $1,056. When you unprotect the document, you can change that value. So I wanted to make sure that everybody had at least one version that had all the right formulas and all the right information and was fully protected when we distributed it. And the amount, the correct amount, is referenced in the memo that's an attachment, $1,056. And as you saw when Dan did the worksheet, he entered that value in.
All right, and then another question we've received is, for supported sites, the agency would be paying the expenses for the site in order to collect charges for the support? So we're not sure if we understand that question. If you could maybe try to rephrase it and resubmit a question, we'll try to answer that for you. Okay, so it looks like for that question, we're just going to follow up offline on that. So that, I believe, brings us to the end of today's webinar. If you do think of any questions after we get off the webinar, you're welcome to reach out to Lydia or myself. And then we will also, as Brooke mentioned, be circulating all of the handouts and also include Brooke's email information.
One last question.
All right, one last question. What are the federal and state rules for programs that receive state and federal housing assistance?
That's a good question. There are certain rules that have to be followed, and the regulations speak to that. If you refer to 104 CMR 3006, and if you look at Section 5, there is a section, subsection D here that says, reduction by the amount of the charge exceeds, if any, the amount permitted to be charged by the terms of a law, a regulation, or a housing subsidy held by the client. In other words, the subsidy rules that govern that specific subsidy type have to be followed. And these regulations require that those subsidy rules be applied, and then the subsidy value gets entered into the worksheet.
All right. Does the same calculation apply to choice properties that are wholly owned by DMH?
This question also falls in line with that same regulation that I was pointing to. If there are other regulations or rules that govern how a charge needs to be calculated, that has to be factored in.
Do we have to use the forms that you sent out, or can we use our own if we are following the calculation rules?
We're requesting that people use the standard tools that were developed because these tools fully meet all of the regulatory requirements.
Okay, so that brings us, oops, keep getting questions popping in, which is great. Can you repeat the location of where to find information on other regulations and rules that may apply?
104 CMR 30.06, subsection 5. Within that subsection, please look at 2 and then category D, letter D.
And when will we know about the food stamp deduction?
Could you clarify if you're asking if the food stamp is calculated, food stamp or SNAP rate is calculated in this calculation worksheet, or is this a different question about SNAP benefits? So SNAP is a different topic, but just to clarify, SNAP does not qualify as income. So it's excluded for this purpose. That's also listed in the instruction sheet.
Okay, so thank you all for joining today. We're going to go ahead and end the webinar now, but again, feel free to reach out to Lydia Conley or myself, Megan Thompson at ABH, if you do have any questions about today's webinar or about these changes. And also, we'll be circulating the handouts along with Brooke's contact information and also posting this webinar on our website for you to access after the fact. So on behalf of ABH, we want to thank Brooke and Dan for joining us today and jointly doing this webinar with us, and hope that everyone who tuned in has a great rest of your day and a happy holiday season.